Hello, baby dolls. My friend here, Tiago, has asked a question. He said there's a misconception that as prices go higher, it becomes more difficult to go even higher. Your friend, Somi, I'd love to see a video of yours chatting about this with your friends and how liquidity has a much more important role here than other mainstream ideas like market cap. So, there are misconceptions here, but it all comes down to growth rate. So you can keep growing if your growth rate's about the same, but growth rates do slow down. However, the question is when? There is a time and place for you to say, well, man, this thing's getting pretty big. There is. But there's also many times in history where if you said that, you miss out on the giga moonshots after. On average, though, I will have to concede, if you're more skeptical and you see euphoria, then you might be better off just readjusting a portfolio. Because you got to think to yourself, what are the chances you've actually got the next Amazon? Or you've actually got the next Apple? Because it's survivorship bias. You don't remember all the brand names and all the people who held. I know there are many people, their parents work for like Ford and different like blue chip old school companies in America, and they're still holding their stock. They've been paid and holding the stock, and the stock's gone like down for like 20 years or sideways nowhere. Think about that. So that's just as likely to happen to you. If not, that's more likely. But with here, right, we're going to go through a few points. So as the price goes higher, you can say, yes, it's harder for it to keep going higher, but if your growth rate tapers off instead of vertically crashing down, you can still get sick gains, man. But look, it's pretty hard to argue with a lot of things. Like, I've got some examples for you where, I can show you cases where it doesn't happen, okay? But like, I don't want you to live in a world where you invest only based off the exception. You're like, oh, well, I'm always going to do this because, it worked this one time. It's not healthy, man. Bitcoin's 4-year return, 9,200x here. Bitcoin's 4-year return from this point was 69x. Right? Bitcoin's 4-year return from here was, they slow down, man. What's that, like 15x? You see that? It's slowing down. You're onboarding a lot of people, but you're slowing down. But it doesn't mean you can't win. It's just that, as this thing succeeds, the chances of you finding the next Bitcoin, they say, gets harder and harder. This is evident in stocks. If you're trying to bet against Google, making the next search engine, betting against Netflix, betting against Apple, there's a saying, the winners keep winning. Just bet on the winners, right? But crypto breaks a lot of paradigms. But first, before I show you a paradigm break, let's look at XRP. XRP, man. XRP in 2017 hit, look what it hit here, 30% of the entire market cap of crypto was XRP. XRP was 30% of the entire crypto. So, at some point, you're going to have to draw the line and say, I think this is a bit too big. But it's so hard. I know it's so hard because the narratives are so strong. The meme is so strong. Because as Bitcoin goes up, they talk about the US debt. They go, there's 400 trillion and we have to print, and they're going to keep printing. And I know that's true, but does that mean all the money's going to come to you? That's the question. Every time printing seems to go a bit out of control, they just tug everyone back in. And they do the psyops in the media to get everyone to stop spending. They massage the numbers and we reset. How long can they do this for? I don't know. But now let me show you when the paradigm was broken. Dogecoin. Doge, this is why Doge was a bit of a miracle here, right? Doge had, you had 1, you had 2. Doge's third cycle curse pumped the hardest, right? So from here, you get a 10x. Next one, 50, 60x. This one, 259x. It broke everything. Third cycle for Doge blew everything out of the water, you know. But do you want to invest with every crypto betting on this? Look what you needed for this to happen. You needed Elon Musk to choose Doge as his chosen one. You needed it. And you needed memes to be untapped potential. You know, it is what it is. So, do you want to take this bet every time? I say that's a very, very risky life to live. If you want to take this bet every time with every coin that their third cycle is going to get good. Didn't work on XLM. Didn't work on XRP. Didn't work on Litecoin. I can go. There's so many others. We're going to see them. It's probably not going to work on Ethereum in the next one. They do slow down over time. That's why you got to get in early. So, when we talk about liquidity, okay, so the next part of Mr. Tiago, you know, liquidity does have a role, yeah, but as the price goes up and people give it more value, on average, the liquidity gets thicker. You won't get thinner liquidity as everything goes up because there's more players now. There's more people want to transact value in and out. Right? So obviously, what would be the dream? The dream would be we all get an asset that pumps to the moon, and after it reprices higher 100x, all the market makers agree, let's pull 75% of our liquidity. Let's make it permanently thin. Now, that would be the juiciest thing of all, wouldn't it? Because then it would be super volatile, and you're up 100x, and you can go for the next leg. But most likely, you don't get that because natural sellers come in as the asset gets bigger. So it all depends, man. Like, look what happened to Doge. Anything can happen, but on average, you got to think about protecting yourself. You know, one of the Bitcoin narrative memes. I'll finish off with this. This is the hard part, right? Oh man, the Bitcoin Maxis. They sucked in some people up here, man. I got suckered into. So, as Bitcoin got higher, so let me tell you, right? Let's zoom in. When Bitcoin hit $50,000 here, every single Bitcoin Maxi, podcasts, radio, influencing, the YouTubes, whatever it was, all of them said this one thing. And they said, hey, now that we've crossed 1 trillion market cap, we are going to accelerate in price because now we are on the radar of all the big institutional funds out there, and they're not allowed to invest in things smaller than 1 trillion market cap. And I was like, whoa, give me the mind explosion emoji. Whoa. Does this McDonald's chart look like that narrative played out? No. Let's give it some fries, man. Yeah, that's exactly what you get. You want to believe bullshit like that? That's the exact narrative you're going to get. And if you're curious why that narrative didn't play out, it's because now that you are on the radar of those big institutional funds, you are getting the end of the adoption curve. You're not getting FOMO people, okay? Right? You see this adoption curve? This is Roger Ver, all right? Roger Ver's here. This is people in 2013 to 2016, 17, all right? This was all of us, 2018, 19, 20. You all bought here, okay? You all bought with Michael Saylor up here. You're in the late majority. Now, you think you're early. You think you're a freaking innovator. Wow, look at you. You think, wow. No. Roger Ver buying Bitcoin for $1 who believes in free markets and liberal values, okay? He's an innovator. He's an early adopter, okay? You buying here, I'm sorry. Should I do it? I'm sorry, friends, you are. You're a poopy head. If you honestly think buying a Bitcoin for $30,000 is early, then what the hell's $1? The guy who bought $1, what is he? Okay? You're buying these bag up 30,000x. Their arguments are very sound and strong. I know. The arguments do say, well, they're going to keep printing. All the money's going to come. And yeah, man, I hope it does. I really hope it does. But there's other value being created in crypto, and Bitcoin's getting pretty boring for everyone, all right? So, Tiago, you've seen this, right? When you see the asset grow this size, and now you unlock the bids from the institutions, these people have like 10 to 20 year horizons. They don't care, man. They did not FOMO. They weren't buying with Roger Ver, all right? They weren't buying here. They are now buying here, all right? They're gonna be the very late majority and the laggards, the skeptics. They're buying because they have to buy, right? And they're going to allocate 0.25%, and everyone's like, whoa, 0.25% of 100 trillion is a lot of money. Whoa, they're going to be killing it, dude. Yeah. Or maybe they just start with 0.1% and they keep it bid for a bit and it goes up slowly. All right. But look, I hope we live long enough. I really, trust me, I hope everybody gets the FOMO in this. I hope we actually do see a country silently print their fiat to buy Bitcoin and buy crypto under the table. I hope we see that. And if everyone gets a whiff of that, we're going to see a huge run. But for now, on average, I'm just saying on average. See, if that happens, by the way, everything's going to go nuts anyway. But on average, you are better off considering, hey, if something's growing up big in the size, yeah, it can slow down, but your compounding growth is still big, man. If you were growing at 50% for 5 years, and now you're growing at 20%, that's not a loss, you know? Your investment's still growing. Because what people do is they switch. They switch from that 50%, it's not growing as much, it's only growing 20% per year. Then they go find something else. That is what I call fondling your soap in the shower, okay? That is the equivalent of you're in strong community network effects. You see Doge up 200x. You start rotating your portfolio. You do some buys and some sells. For every 10 people who do this, one person escapes with like 10x their money. 9 out of 10 people end up on Coinfessions wrecked. And they say, oh my God, if I just held from the start, I would have had something. But instead, now I'm a sucker. So no matter what we say, people are always going to play this game. But on average, man, this is how the game works. The game works like this. We are in the coins we're in because we want to get to this stage where you're so big institutions buy you, but they're not FOMOing. They leave their bids, they're quiet, they do OTC, they do the dodgy stuff to try to get filled. They don't really care. They use the futures, they get thick liquidity. Completely different game, okay? And by that time, it's really late, man. It's like really late, okay? So this addresses your question, sir. We've gone through different factors here. We've spoken about liquidity. Yeah, there is a misconception. Yeah, there are occasions where just because something's gone up doesn't mean its growth rate can't actually increase after that. However, on average, the odds are most likely the rates do decrease. They do. But I mean, like, at the end of the day, let's use real numbers here. Like, if you're in something that went up like 100x in 3 years, and if you have done your research and you're like, you know what, I think it can do another 100x. It might not happen in 3 years, but it might happen in like 7. Well, man, just do it. Just do it, man. You're going to get 100 times your money. Where else are you going to find that? The low-hanging fruit in crypto is getting eaten up. Don't give away your diamonds for pennies just because you see someone else buying JPEGs and killing it. Until next time, friends.